so far, I'm not surprised actually by the price action. I'm not saying I told you so, but I kind of did. So we're going to take a look at how the next steps could go. But there's also a bunch of shit going on the macro world right now that is fairly interesting, because POTUS is definitely keeping us entertained. Let's put it that way. And I think you do have to take it with one smiling and one crying eye, I would say, because there's definitely decisions right now being made from the US government that are, let's say, questionable, and you can have your own opinions. I have mine, and everyone has an opinion, as everyone has a butthole, but that's totally fine. I don't think that it is great for the economy right now, but it could be great for the economy in the last half of this year, or even a little before that, because if the US is cornered right now, they are making a lot of decisions that you wouldn't make if you are well. Right? Like a lot of extreme decision making in politics and geopolitics is being made when you're cornered and when you have an issue that you have to solve. And the US is kind of fucked, because if they keep doing what they're doing, by 2030, 2035, their national debt is gonna basically consume all their GDP just by interest payments, and that is definitely a problem. And the declining demographics, meaning more old people than young people, come into this world or stay in this world, that is definitely not playing into their cards, because it won't help them to get a higher GDP. So either they aggressively scale their economy and make sure that GDP and income, household income, goes up, or they aggressively scale down their interest payments, the money they have to pay on the debt they're already holding, and they can also do both, which I think they're going to do. So why is that interesting? Because it means low interest rates and good conditions to borrow money, and easing of balance sheets, which is also known as quantitative easing. And it means acceleration of economy, which basically, that's the reason why they do it, because they want to increase economic activity again. So far, the numbers are looking good that are coming out of the US. But if this would be not enough, they are also on a streak to take over world domination, as we all know these days. So this week there was a meeting in what was it, Davos in Switzerland, and there were a few speeches by government leaders that talked about, I think the main topic these days is that the US wants a trade deal over Greenland, but they want Greenland. Let's be clear here. But the European Union said they're going to halt a US trade deal over the Greenland tariffs. So we're looking at a tweet here. I think you should see it. Yeah, from Bernd Lange, a fellow German man here. I think he's working in the Chamber of Commerce on the European Union level or something. But what he says is important, and he tweeted on the 21st, so 2 days ago. Now official, the EU-US deal is on hold until further notice. Our negotiating team has just decided to suspend the work of EP Trade on the legal implementation of Turnberry deal, which was a deal that was struck last year in around August, when Trump was already throwing around tariffs. Our sovereignty and territorial integrity are at stake. Business as usual, impossible. So definitely a lot of tensions right now that are rising, and it's not good for trade. Let's put it that way. So the European Parliament has halted the work on this Turnberry US trade deal, and that is definitely still in place right now as of today. They said that they'll keep the files frozen until the US withdraws its Greenland-related tariff threats and return to cooperative stance. And then the US also answered, because first, before the European Union decided to halt that Turnberry deal, Trump has threatened 10% tariffs from February 1st on several European countries. And he also wants to escalate this to 25% by June if we are not coming to an agreement over the control of Greenland. Now, Trump has since announced, since all this, turmoil this week came up and the European Union halted that Turnberry deal, Trump has announced that these specific new tariffs will not go ahead for now, saying a framework for a future deal over Greenland made them unnecessary. So they they are talking. He has been talking to NATO. They've been talking to Arctic security, and there's definitely still existing tensions, and there's not a final conclusion yet, so it's still a lot of uncertainty. But for now, for today, as of the Friday, 23rd of January, the US has been pulling their threats a little bit back. The European Union, though, is still standing strong, having basically frozen those temporary deal files from last August, which, by the way, are pro-trade for both nations, so it would be a good deal. But even one step further, the European Union officials are also discussing more tariffs on US goods. They are talking about so-called anti-coercion instrument that they so far have held back, and it's some sort of trade bazooka that you could use to avoid immediate escalation, but it's designed as a last resort tool against economic coercion, and it would significantly raise costs and barriers for targeted US business if activated. So basically, US trade inside the European Union would be extremely difficult if they really do that. So that would be the next kind of big thing if it really escalates. So yeah, let's see if the US is basically giving clear retractions of the Greenland-linked tariff threats. So far, it's only been a few words here and there. And if they are returning back to cooperation rather than confrontation, because right now it is they're very on the confrontation course. So that's happening on the macro side of things. There was definitely more going on this week, but we can't dive into everything, but it impacted the markets as well. We are in the weekly chart right now, zoomed out view, to see what's going on here in the larger time frame. I believe we are right now in a larger fourth wave correction here in the weekly macro cycle, basically. That cycle started in the low of $8 after the FTX crash. So we're right now in this fourth wave sideways movement here. And this fourth wave could technically go as low as $60 or even lower. It would be still, it wouldn't invalidate this wave count. But I do think this would be an extreme environment to be pushed that far. More realistically right now, I do think that we are in the micro counts here inside this fourth wave in an ABC correction. We're in the C wave to the downside right now. That C wave started with last year's high in September 25. Sorry, was it September? Yeah. So that was the last high that we printed in 2025. And from there, we saw this sharp decline, right? Into January 2026 now, where we saw a small kind of pause of the decline that happened here. And I think this is the fourth wave of the C wave down here. This one here, where we are right now, basically in this resistance zone to the upside. And we could have already managed to basically hit the resistance in the fourth wave because we crossed some FIB levels. It is fairly shallow wave 4 correction here to the upside, or relief rally, basically. But it wouldn't surprise me if that's it, because the market environment right now is just not strong enough to give a stronger wave 4, I think. So for now, unless some fundamental news in the world give us a different explanation, I don't think we have to necessarily go higher, even though we could go as high as $200 and we would still be in this fourth wave. But I'm watching for the fifth leg down to the downside here right now. That could then bring us to $90 basically on the Solana chart. So it could bring us to sub 100. It doesn't have to go sub 100. We could also, we could definitely also pause between $110 and $100 or something. Also possible. But I think in the weekly long-term chart here, it wouldn't surprise me if we see that fourth wave here to the downside playing out a bit deeper here, because the C wave technically needs to be lower than the A wave here at $105. But this doesn't have to happen next week or something, anytime soon. What happens right now here on the more granular chart of the Solana token, is that we made a 1, 2, 3, 4, 5 move right now. We're in the fourth wave here, also in the micro count. That fourth wave necessarily is also, again, I think we don't need to go much higher than this. We can actually put the fib levels here between the second wave, the third wave, and see where prices could bring us. And yeah, we can tell that we already managed to retrace up to the 0.382 up here. So we don't need to go much higher in the fourth wave. We could definitely. So it could also be that we're in an A, B, C right now, and we see one more high in that fourth wave here before we break down in the fifth wave. So that is, yeah, something you could trade basically is one more relief rally into a higher fourth wave pullback. But the chances are not high, I would say, that this happens, not much higher than 50%. So it would be still a calculated gamble, but not a huge chance. What would be a safer trade, in my opinion, is basically wait until we hit some more fib levels here of this fourth wave in an upside move, and then scale into a short position to catch that next leg down to the downside, because this wave count here in the sub count doesn't look complete yet. I would like to see one more fifth wave here to the downside, and that needs to have crossed the $124. So either it happens right now, or it happens after one more relief to the upside. So that's what I'm watching on the Solana chart right now. And I think after we've hit that fifth wave here, we will see either a larger relief rally, because it would be an A and then a B wave to the upside that will bring us at least $250, maybe even higher. But it could also be already that we're making a low here that's low enough, maybe $115, maybe $112. Let's see how far this fifth wave would retrace. If the lower the fifth wave goes now, the higher the chances that we see a larger bounce to the upside. The higher it stays, the more I think this will just be a relief rally and then push us down one more time into this final stretch of this larger fifth wave correction into the overall fourth wave count. So this is what I'm reading right now in the markets. Obviously, I have no idea what's actually going to happen. All I'm doing here is looking at probabilities, mainly based on traders' psychology. Which instrument helps to see that is the Elliott Wave theory, because that helps us to understand how trader psychology works by, well, a system of, or a set of rules that you can follow to understand and make sense of charts, instead of just looking at them and taking random punts. So let's see where it moves next. This is, of course, no financial advice, because I don't have any idea what's really going to happen. Now, as last section for this part of the live stream today, and as last section of this YouTube video here, where we talk about prices, markets, and charts as well, I'd like to talk a little bit about a report that was put out by ARK Invest. You might be familiar. They've been doing very a lot of the big tech ETFs. They're coming out of ARK, and some time ago, ARK also invested heavily into crypto and became one of the first institutional investors, I would say, that are big on crypto. And they published a report. It is the Bitcoin quarterly Q4 2025 report with the latest stats from the Bitcoin ecosystem. Obviously, at Sol Brothers, we talk about Solana, but we're also talking about everything that impacts Solana, and Bitcoin is still the leading crypto here that pulls or pushes the whole market. Now, what I found interesting, without going too deep into this whole report, you can take your own look if you want to. You can find it on the ARK Invest Twitter page. They posted about this. You can see that they have one graph where they put something called the on-chain mean as a line on the graph here, on the Bitcoin graph. And it is an interesting indicator here, because we can also see that the Bitcoin price did cross the 200-day moving average, but it didn't cross the on-chain mean. And the on-chain mean is a bit difficult to understand what it actually does in detail, but high level, I can explain it to you, which is basically we're looking only at active coins and not dormant coins. So this metric excludes all the Bitcoins that haven't been moved for a long time and only looks at active coins by movements. So why this is interesting is because it gives us the average price, the average entry investment price of investors that are moving the tokens and not just hodling them since years and maybe even a decade. So I think it is a barrier that is more important than the dormant coins, because the dormant coins, we can expect them to move much less, just statistically. But the active coins that have been recently bought or are always being moved, they are also probably being sold earlier than everything else. So when we're above that line or when we're touching that line, it means that all these active tokens are still in profit, basically. So they're not underwater. And if we cross that line, then Bitcoin is undervalued compared to the active token price. So right now we're right at the line, basically, where I think a lot of selling pressure is coming in again and accumulation is going to happen. So I think we're definitely hovering around a point on the Bitcoin chart that indicates seller exhaustion, I would say. There's a bunch of other charts here in this report, like the long-term holder chart, where you can see who's realizing losses. So we saw a little bit going on in 2025 and recently as well a little bit, but not too much. Late 2025, long-term holders realized losses as a percent of total realized losses as high as 64% in a single day. So there have been some outflows where long-term holders also sold their tokens, but I think this is a normal market movement or behavior. And another thing I wanted to look at is the volatility as well, because interestingly, Bitcoin volatility is super low. It hasn't been that low almost ever, which is interesting, I think, and ARK also thinks that we're coming into a more mature market, obviously, where higher risk-adjusted returns are possible in the coming years. Risk-adjusted returns means that the returns this asset is providing for us compared to its volatility is actually going up. Because in the past, sure, you can get huge amounts of APY or returns for the better on Bitcoin, but it was also extremely volatile, right? Especially in the early years. But right now, it's really not. So Bitcoin is definitely leading the pack here, I think, when it comes to low volatility in all crypto tokens, which is good. It is a mature asset by now. Yeah, there's a bunch of other stuff also about the US economy and how bad it is, how low the US consumer sentiment right now is. It is actually as low as 1980, which is also insane. So a bunch of interesting stats here in the research. So shout out to ARK Invest if you want to learn a little bit more about what happened with Bitcoin in the last quarter of 2025. Now, with all that being said, we're gonna pause this stream here right now, or end the video on YouTube, where it's all about charts, prices, and macro. If you want to know more about the Solana ecosystem and you are interested in Solana news, then you should check out the next video that's dropping shortly after this one on YouTube, where we are talking about the latest news on Solana. And we're going to do a little deep dive as well into the SKR token, the latest token drop from Solana Labs, actually, related to Solana Mobile. Until then, thanks for watching. Make sure to subscribe to the video, leave a comment, let us know what you want to see on this channel. And yeah, like the video as well. I'll see you at the next one. Peace out.